So those of you who don't know anything about this broadcast that we do or the courses that we do, I started doing this about a year ago. I think that the broadcast maybe like 6 months, but the course is a year ago because I really wanted to teach entrepreneurs about basic startup finance, stuff that I was seeing entrepreneurs do wrong. So this course that we're talking about today, 3 Steps to Raising Capital Fast, actually grew out of my current students. So last month we had our broadcast was how to crowdfund $1 million in 30 days. And that was the course we did in March. And that, again, came out of the student demand. So somebody said, hey, I see in your Lean Finance for Startups course that you talk a lot about crowdfunding. Can you do a course just on crowdfunding? So we did that, and that's up, and that class is doing really great. And then last session on Spreecast, someone said, hey, we're talking a lot about crowdfunding, but what about equity platforms? So that's how this class came about. So if there's any topic that you think is confusing or you think is interesting and you want to know more about, just let me know. You can tweet me. My handle is @Lili Balfour. If you're a student on Udemy, you can email me there. So just let me know whatever you want to learn. I'm doing about a new course about every other month. That's kind of a good pace because I want to have time to research it, do some case studies, and make sure it's really a great course. And so I'll be filming the last one this weekend, so I'll have it all ready for Tuesday. So again, the link is there. You can check it out. But again, if you don't want to take the course, I want this Spreecast to also be a standalone that you can actually understand the basics. And if you want to just go and do it on your own, that's also another option. So the 3 steps to raising capital, let me just quickly give you an overview. Step number 1 is metrics, understanding the metrics that you want to show and how to show them. And the second thing is angels. You want to anchor an angel in immediately, even before you launch. You want to have your angels set up, at least 1, perhaps 2 or 3. And then that third step is going to be managing the chaos. I like to say it's not a sprint, it's not a marathon, it's a hybrid, it's something in between. So again, your 3 steps are going to be your metrics, anchoring angels, and then managing the chaos. So what we're going to do today, I want to make sure I can even see the questions. I see the chats. If you want to ask a question, just go ahead, and it should be here, scroll down, and you should see something here. Yeah, viewer questions and suggestions. So add new questions to share. So just go ahead and type your questions there, and I'll try to scroll back down. I use my laptop for this, this Spreecast, and I should use my monitor because my laptop always condenses everything. So, and I'm going to show you here, just so you see what it looks like. So then you can, if you just type something in the chat, that is fine. And you can also put your question there on the bottom. So let me see if I can scroll myself back up. So let's go ahead and jump into that first one. That first one is the metrics. Now, I think that causes a lot of anxiety with entrepreneurs because they say, well, we just got started, we don't have metrics. I think a lot of entrepreneurs think metrics have to be about revenue or profitability or gigantic customers. And if you have those, that's great. But if you don't have revenue or customers or anything that's really impressive, you can look at some other things. I would say that they're pretty much tiered, whereas profitability is number 1. If you have some profitability, that's great. If you don't, how about some revenue? If not, how about some customers? If not that, how about some traffic? So you can kind of see how you can look at them in tiers and say, okay, we don't have revenue or profitability or big customers, but we do have some traction. So I want to talk about this in really general terms, but in the course, I will lay it out. This is what you should have for e-commerce. This is what you should have for brick and mortar, and so on and so forth. So just a basic example, if we're talking about traffic, right? And traffic's the easiest one to get. You can throw up a website today and start getting some traffic to that website. Now, it's not just so much to show who comes there, who comes to your website and who leaves their email address. So perhaps you want to set up a splash page about this great product that you're going to create or this great jacket you're going to produce, and you set up a splash page and you collect email addresses for people who want to get it when it's ready. Okay, so how did that go? How many email addresses did you get? That is a good indicator at the very base of interest in your product or service. So think about a metric as an intention or a level of interest. Of course, if you have revenue and profitability, that's a really great indicator. But if you don't be intimidated by metrics. Now, some of the ways I see people do this, and there's one ice cream company that I actually am putting the case study in the course because I think it's great. They actually list their revenues, right? Because it's ice cream. It's not a high-tech thing. It's not a a fancy e-commerce site where they can talk about subscriptions or conversions. It's ice creams. They basically put their revenues in there, because if you're selling a product, a tangible product like ice cream, it really is a matter of how many units you're selling. It's not a matter of, oh, well, somebody came to my site and they liked my Facebook page, right? It's really about how many units you're selling. So I think it's great to show revenue. I think a lot of entrepreneurs are afraid to show revenue because they think, okay, I don't want to put myself out there. So when you're showing metrics on these public platforms, and I'm going to talk about AngelList and Rock the Post, but of course there are others. With AngelList, you can create, screenshots. You can show a few PowerPoint slides on the home page, and there you can list some generic metrics. So somebody might say, we're not really starting off that strong. I'm kind of a little bit embarrassed about our metrics. So what you can do is show the progress. So think about how you're wording your metrics. So you don't want to say, our conversion rates, are this, give a low number for your industry. You want to talk about the delta. So, how has it changed? How have they increased? Because when you first get going, your metrics are not going to be great. That's the learning process. So you can put that in perhaps a slide that we've increased our conversions by 30%. You don't have to tell them the starting and the end. You can save that for your investor presentation. And we'll talk about that in step 3. So again, just to recap on metrics, you want to make sure that you're picking the right metrics for your company, of course, and you want to show them in the best possible light. So if they're not super great, just talk about the delta, the change, the increase, and that'll be a stronger metric. Now, Tom, I'm going to stop here. Tom, can you hear me okay? Let me see if you guys have any questions. I'm a motor mouth, so I can just keep going and going and going and going and going. So I want to stop here. I do see Tom. Maybe I'm looking at this wrong today. So let's see, I'll pick on somebody else. Hey, Daniel, can you hear me okay? Maybe everybody is confused about the new layout and nobody knows how to chat. Okay, here we go. So Ali says it's working. Sylvia says it's working. Great. Yeah, so whenever we have a new interface, I always worried if people are not going to be able to ask questions. So if you have any questions, feel free to jump in. And if I miss your question, if you're thinking about something after we move on to the next one, we can loop back around. So we'll do a recap at the end. So let's go ahead and jump into number 2. So our first one was metrics. Our second one is anchoring the angel. Now you want to, very similar to crowdfunding, have something in there, right? It's your social proof. It's your validation that you have some interest there. So this course is called 3 Steps to Raising Capital Fast. And I think what people think in their mind is, oh, okay, so I can just get off this broadcast and go put up an AngelList page, and all of a sudden this money is going to come to me. And actually, it's the reverse of that. So there's all this preparation that you can do to make sure that once you launch your campaign, it's going to happen quickly and fast. So when we talk about angels, when we talk about who we should have in our campaign, we should be thinking about that right now. So I think the best time to raise capital is either in the spring or the summer. The spring or the fall. And so if we're in mid-May right now, you can take June, July, and August to really get your campaign right, work on your metrics, work on your angels, work on your timeline, and then September 1 or September 5 or whatever, after Labor Day, you can launch your campaign. So when we talk about getting an anchor angel, you want to start thinking about that now, because it could even be somebody that you don't know yet. So one mistake I see entrepreneurs make is that they'll say, okay, I go to AngelList or any platform really, and I look at the top 50. Those are the most active, most high profile, most successful investors. And by successful, I mean not just in building their own companies, but also picking the right company. So investors who have picked successes in the past, and they'll hone in on those. Okay, and that's actually wrong for a couple of reasons. Now, the first reason is that you haven't really thought to yourself, okay, does this investor know anything about my industry? Now, I'm going to give you an example because it's an example I think everybody knows by now. A company called BarkBox. So BarkBox is dog products, treats, and so forth that comes as a monthly subscription. So let's rewind 5 years ago and say BarkBox wasn't here, and I want to create this concept. Nobody knows about it. Nobody has been thinking about sending stuff to your dog every month. So if I go to AngelList and I think, okay, which angel do I want? And that angel doesn't have to be on AngelList. You can find an angel anywhere and ask them to join AngelList, or any platform really. And what if I just say, okay, I see Mark Cuban here. Mark Cuban's great. I saw him on Shark Tank every Friday night. I'm going to pick Mark Cuban. Now, hold on a second. What does Mark Cuban know about dogs? Or has he ever invested in a subscription model? So perhaps you want to pick somebody like Ted from Dogster. Dogster, if you're not familiar, is a website for dogs. It's been around forever, I think 10, 15 years. So clearly somebody like Ted, who's the founder of Dogster, would have deep domain expertise. So when somebody comes to your angel list or your Rock the Post or your whatever page and they see that your anchor investor is somebody who has deep domain expertise in this idea that you're doing, and let's admit 5 years ago, BarkBox would have seemed like a crazy idea, you're going to get more validation, more social proof. People are going to believe more in what you're doing. So when you pick that anchor angel, don't think it has to be a big name, somebody that everybody knows, somebody that's on TV. It doesn't have to be Mark Zuckerberg. It can be somebody who just has really great domain expertise. So anyone who just came on, we're on step 2. So we did, the first one was metrics. That was your first one. Number 2 was angels, just anchoring the right angel, getting that person in there. And of course, I call it step 0 in the course, that just always focusing on your timeline. I think you should sit down right now and figure out, okay, if I'm going to raise capital on a public platform, what is my timeline? Am I going to do it this fall? Okay, great. So I'm going to spend June, July, and August getting all this ready, meeting the right investor. I'm getting my metrics in order. I'm getting my pitch deck in order, and so forth. So does anyone have any questions about that, about picking the right angel, finding the right angel? Okay, so Sylvia is asking, are there any PDFs or materials for this call? And the course, if you click, check out 3 steps to raising capital fast, right above my head, that is where the course is going to live. It's currently in production. We're doing all the videos this weekend, and the good people at Udemy are making an image, course image for it. So if you go to that page, it probably will take you to my website where you can pre-order for $24 the course, and it'll be live on Udemy, I think, Tuesday morning. So, and then there'll be plenty of PDFs, plenty of materials there in that. So in the course, we're going to show all the metrics, all the different type of metrics for different revenue models. We'll show different techniques that you can meet angel investors. And one really simple thing that I think people should do is that when you sign up for either AngelList or Rock the Post or pretty much any major platform, sign in with your LinkedIn address. Okay, don't sign in with your Facebook or your Twitter. And if you tweet nonsense, that's fine. You probably want to curb it a little bit. But you want to think about your fundraising page, wherever you have it, AngelList or Rock the Post, is a representation of you and your company, right? So I talked about step 0 being the timeline and getting prepared. Start thinking right now about what you look like online. So Google your name, Google your company name, and make sure that you have a really good presence. So make sure that if an investor were to Google your company's name or your name, they would find a Twitter, a very populated, hopefully, Twitter handle with lots of informative tweets and helpful tweets. You can start blogging right now, set up your company's page with just a splash page if that's appropriate for you. If you don't have much traction yet, start blogging, start putting a lot more content out there, because that's another big thing of this, especially when you're talking about investors who have never heard of you, perhaps are in a different state or even a different country. They're going to go online and see what they can find out about you. So you can start thinking now, May, June, July, August, of building your social footprint so that when people go looking for you, they see something very professional. So again, log in with LinkedIn when you create your platform so people can see, oh, look, he's connected to somebody who I went to college with or something like that, because that's the way that the world works. People use the internet to see what the relationship is. They want to see where you went to school, where you've worked, if you have recommendations and that kind of thing. So think about all those things. Do you have a Facebook page? Do you have Instagram, if that's your thing, if you have a very visual product? Hopefully you have an Instagram and a Pinterest. And then again, that's a metric, right? So if you're just getting going, but you have all this great blog content, and you're really helping people understand this certain problem that you're going to solve with your company, and you have lots of Facebook followers, a lot of Twitters, a lot of fans, so to speak, that's going to really present you well to an investor. So start thinking about that, thinking about getting your image out there, getting your LinkedIn profile, if you don't already have one, getting that all cleaned up, and really demonstrating that you have done a lot in your industry, and you can add whatever is most important. If you're doing something in design, it's did you intern with a certain famous designer? If you're doing something in tech, which tech companies did you work for? And I know a lot of people just get started on their own. So if you've done a certain, boot camp, a coding camp, explain there. So explain as much as you can about yourself online so that when potential investors come looking for you, they're going to find something really great. So those of you who've never been on either Rock the Post or AngelList, there's different tiers of information. So the information that you put out for the public is different for investors, but you got to remember that a lot of times before an investor actually clicks that, I want to know more information, they're just looking at the public data, right? So just make sure that it's what you want it to represent. So again, we had number 1 was our metrics, number 2 was anchoring the right angel, making sure that you're presenting yourself well, and then number 3 is just the whole process. So I was saying it's not a marathon, it's not a sprint, it's a high run. It's a marathon and a sprint, because when you're raising capital publicly, you want to do it quickly. One of the mistakes I see entrepreneurs make is they go, oh, okay, it takes about 3 months to raise capital. Like if you just go historically and look at different deals, typically takes from the minute you make the introduction until you actually close the deal is about 3 months. So they kind of take their time, like, oh, I'm just going to go ahead and put this up there and take my 3 months. But what I think you really need to understand is that you want to keep a certain pace, a certain level of interest up. So it's going to be up there for about 30 days, and that doesn't mean that you get the money in 30 days. It just means that for about 30 days, you're going to be making introductions, giving information. And when we talk about crowdfunding, we're talking about a $20 or maybe even a $100 pledge to get this product or service. So the ask is really small. So, somebody going to your Kickstarter page and giving you 50 bucks is not, there's not a lot of trust that has to happen. It's a pretty low threshold. But if you are on AngelList or Rock the Post or any platform and you're asking for 50,000 bucks, there's a lot of trust that needs to happen there. So keep that in mind, that when you are managing a public platform, equity platform, it's a lot different because the ask is higher. So keep that in mind, that you're going to want to pace yourself. I talk about this in the course about getting all your due diligence materials together. And if you go and you just Google due diligence checklist, you'll see a lot of different checklists out there, and they seem kind of cumbersome because there's a lot of information. Your board meeting notes. You probably don't have a board, right? So I like to tell entrepreneurs, when you think about the due diligence checklist, think about anything that you're presenting in your pitch deck. So if you're showing that, oh, I have these customers and these ones have a letter of intent and blah, 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 and you start talking about your pipeline, you need to back that up, right? So if you're saying you have everybody lined up and you have letters of intent, you should put those letters of intent in your due diligence package. And you could put your due diligence package on like a Dropbox or a box or any kind of shared a place on the line, or you can do an actual physical, paper file, whatever works for you. Put them on a disk or whatever makes sense for your industry. There are a lot of different, digital warehouses and libraries where you can store the data. So that's a really important piece of managing the chaos, is get all of your due diligence materials in order, start figuring out if your industry is the type that wants these in print or wants them digital. I think most investors are moving towards digital. And start getting that ready now. Get your due diligence folder ready now, so that when you're in the process, and so you've put your page up, you have all these people asking, to meet you, you show them the pitch deck, they talk to you on the phone, they meet you in person, now they're ready, but they want to see the due diligence book, right? So make sure that you have that ready, it's prepared. And then the whole legal process happens, where they give you a term sheet, you have to, hopefully have an attorney, you should have an attorney, look at that and say, yeah, this is good, this isn't good, and perhaps for some negotiation that happens. So in the course, I have a whole section of resources where you can see, okay, what is a convertible note? What does it mean? There's other types of convertible notes. We talked about this, I think, 3 months ago, something called SAFE, and that's a woman, Carolyn Levy from Y Combinator. She's an attorney who's created this whole different kind of instrument that says it's a convertible note, but it doesn't have interest, because for most angel investors, they're not interested in the interest that they're going to get from their investment. They're looking for long-term growth. So that's just a simplified version of a convertible note. So you can start getting familiar with these things now, so you understand a convertible note. You understand a SAFE, that it doesn't have interest. You understand a valuation cap. So a valuation cap and a valuation, that's another little exercise that you have to do. So what kind of valuation do you want? AngelList is great because there's actually a little section that you can click and see, aggregated data. Of course, it's not specific companies, but you can see levels of valuations. I always say that if you look at historical data, it's about 2 million at the seed level. If it's a really hot company, of course, it's going to be a lot higher. And if you're in an area that doesn't have a lot of activity, it's going to be lower. But so figure out your valuation, what you want your valuation cap to be. Valuation cap is just helps to figure out how these convertible note investors will convert into the Series A. So I'll explain how all of that works. The more you know, the better. Don't wait till you need to know to find out. Start doing your homework now. Again, going back to step 0, which is all building your timeline, figuring out when you're going to need to know this information, and learning it now so you're not learning it on the fly. You don't want to wait till September when you have investors interested, and now they're talking to you about term sheets and you have no idea what they're talking about. So just kind of start figuring all this out now. So again, going back to the hybrid, marathon, and sprint, you can see how you got to keep momentum going. Like every single day, you're constantly talking to the investor, giving them new information, meeting with them, showing the due diligence checklist, looking at the term sheet, talking to the attorney, negotiating the valuation, blah, blah, blah. So you can see there's a lot of stuff going on. And it differs from a crowdfunding campaign where it's pretty much, when you're doing a crowdfunding campaign, you're on all the time, but you're not on with legal documents all the time. You're not on with valuation of your company. You're not on with all these different, really important decisions. So when we say, is it a marathon or a sprint? I think a crowdfunding campaign where you're not doing equity is pretty much a marathon, right? It's a slow process, $50 here, 100 there. No one's really into a really deep level of commitment, so there's no legal documents to look at. But when you're doing an equity platform, and basically, if you're doing a convertible note, you're not giving equity yet. But remember, it's a convertible note, so there's an intent to give equity. So when you're on Rock the Post, or if you're on AngelList, or if you're doing an equity deal anywhere, just keep in mind that you are eventually giving these people equity. So there's a lot more paperwork, a lot more to think about. It's more intense. So get ready for a very long sprint. Let's see. Brian has a question. My computer wants to update something. How about not right now? So for a website which its metric is based upon traffic or a large user base, at what point is the right time to approach potential investor? Anytime. So he is asking basically if your website is based on traffic users. So think about, a good example is Pinterest. Hello. Pinterest is just amazing. Like it really is all about, just the traffic. They have heard that they have a little bit of revenue, but they haven't really established a robust revenue model. Pinterest is a good example. Like it's all about the traffic they have, the number of users that they have. And then of course the old standbys, Twitter and Facebook, which we talk a lot about in the Udemy courses. We do a little case study in there. And we look at, Twitter, for example, how much they raised. They raised $1 billion, and they, were not even profitable yet, but they had tons of users. And I personally am bullish on Twitter. I think it's a great company. It's a great platform, and just the massive amounts of people, users on their platform is amazing. And it's also just the quality of how we constantly go to Twitter for news. We constantly go to Facebook for news. And so we go back a little bit and talk about metrics, and we talk about this in the course. I think I'll add it here in the new course as well. Your monthly active users, your daily active users. So monthly active users is going to tell you like who's coming, during the 30-day period, right? You want to understand the ratio of daily active, because if someone's coming like Twitter and Facebook every single day, that's a good number to know. So what's the ratio between daily active users and monthly active users? You want it a little bit above 50. 50 is kind of the benchmark. So somewhere, and again, I said it in the beginning that don't be embarrassed of your metrics because they're not going to be great. You can say, you know what, our DAU to our MAU, our daily active to our monthly active was only here 3 months ago, and now it's up here. So again, show them the delta, show them the change. So you're not just saying our daily active users to monthly active users is 2%, so hopefully it's higher than 2%, but show them the change, because when you're just getting started, I think there's a temptation to look at somebody else's sizzle reel and compare that to your behind the scenes, right? So look at Twitter, look at Facebook, wonderful traction. People are obsessed with looking at news on Twitter. Anytime anything happens, you go search Twitter. Hey, is there a fire? Let's go find out on Twitter. So don't expect your metrics to look anything like Facebook or Twitter today. Those are good benchmarks to have, but you just want to, hopefully be progressing, constantly fine tuning, and then showing the investor why you improve. So you say, we were here for 6 months, our ratio was not very good, and then we added this feature. We added certain, editorial content to our site, and we changed this feature, or, updated it in some way, and then all of a sudden it jumped. All of a sudden our daily active to monthly active ratio shot up. So right there, you're showing the investor that we have figured out the equation. We know what works for our target audience. So it doesn't have to be a high ratio as long as you're improving that ratio. That is a good indicator. Yeah, I think a lot of times investors are afraid to show their metrics. They think, oh gosh, we barely have any revenue, or we barely have any users, or our ratios aren't that good. But you just, as long as you're progressing, that's the process. It's the example I love to use is Airbnb. If you don't know their whole history, go back and read the story. Just Google Airbnb history. It'll just show you that companies that we look at today, we look at their sizzle reel, so to speak, where they look so great. Go look and see how they started, because it was not always an easy road. It was very hard, and there were times I had the great benefit of hearing Airbnb speak in person, and they talked about how they really didn't think they were going to make it. At some points, it just felt like they were never going to figure out, get traction, and get moving, and look where they are now. And the example why I think Airbnb is such a great example for young entrepreneurs to read about is because when you see Airbnb in the news today, they're constantly, whether it's San Francisco or New York, up against cities who are trying to battle them with regulations and trying to shut them down. And a lot of times you can just look at this at face value and think, gosh, how can these guys at Airbnb just keep going when they're constantly being threatened by all this litigation? And to me, what I think it is because once you've been battle tested, once you've gone through, as people like to say, cockroaches, right? You just can't kill them. You become stronger. They say if it doesn't kill you, it makes you stronger. And it's so true that when you're building a company, if you fail and you fail and you fail, but you just keep getting back up, eventually failure or somebody coming against you with litigation, all of a sudden this doesn't really faze you anymore, because you're pretty much battle tested. So again, Airbnb is a great story to read and understand how hard it is to actually get going and get traction. And those of you who don't know, the story is really great. Their pivoting point was that they started going out and quote unquote doing things that don't scale. So getting that photographer in there, taking pictures of the places and then putting them online, because prior to that, people were just putting their own photos up on Airbnb. They weren't very attractive. You'd go look at hotels, and then you'd go look at pictures on Airbnb, and you're like, okay, I think I'll just stay at a hotel. But then Airbnb, what changed for them is they started getting a professional photographer in there, and then really showcasing how beautiful these places were. And all of a sudden their bookings went up. So you got to figure out, what's that thing that's going to turn the corner, and figure out what it is for you. So, okay. So just to recap you all, the first step was the metrics, understanding the metrics, understanding whether it is, your users, your daily to monthly active, whether it's your conversion rate, whether it's your sign up rate, whether you're doing something for enterprise software. So perhaps you're not going to have any of those, and it's just a matter of how many big customers do you have. Do you have customers that you're going out to? I talk about this a lot in the previous courses, that the best money you can get is from your customers. So hopefully that's how you're building your company. Like you're building your company by going out to your customer or your target audience or your end user, and you're focused on getting their attention. So that's your metric, right? You're building your metric. So if you're going out and finding beta customers who are going to give you feedback and fine tune your product, those are your metrics. We got 500 beta customers and blah 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 blah. So never be afraid to put your metrics out there if they're not super great. Just focus on how they're getting better and what you're learning, because that's really the process of building a company, is just learning, getting better and better and better. So great. And I always like to go for 30 minutes. We call this the office hour for my course. And I just hit a button that says pause. Let me see if I can put it back. I think I just paused you guys. I paused the chat. Yeah, so we always go for 30 minutes, even though it's called office hour. Okay. Resume chat. Here we go. Okay. So yeah, so do you guys have any questions about metrics, about finding that anchor angel investor that's going to make a big impact, about managing the chaos, anything I threw out there? And so anything that you want to know more about, let me know now, because we are building the course right now. I'm just right now finishing today all the content. What we typically do is we put everything, Microsoft, PowerPoint, all the documentation, and then we take feedback. Like right now, if you wanted me to add something, I can definitely do it. And then over the weekend, probably Saturday and Sunday, we film all the videos. So it's a screencast, and we're probably going to experiment this time and do more talking head video. So if you have an opinion on that, let me know. But I do want to say about the class, because I take a lot of classes too, not just on Udemy, but everywhere. The thing that drives me crazy is when I want to learn more about email marketing, right? Because it's something I just started doing. And I went to this class, it was really great. But like the first 20 minutes of the class was the woman telling me how to set up a MailChimp account. And I was like, okay, I pretty much know how to set up a MailChimp account. Like that's not what I need to know. So I'm a big fan of time management. So never in my courses do I show you how to sign up for stuff. So I will not be showing you how to sign up for an AngelList account or how to sign up for Rock the Post or sign up for anything. But what I will do, because I have accounts on both, and I help my clients with accounts, is that I am going to document what most entrepreneurs get confused about. If you go to AngelList, it's going to ask you what your valuation cap is. I don't expect everyone to know that, so I will document, explain valuation cap. And we talked about that a few sessions ago. I did it, but I'll do it again. So I'll explain valuation cap. I'll explain, what is a term sheet? Where can you find a term sheet? Because that's one thing you can start doing now is get your term sheet in order. Start reading it and start even working with an attorney if you need to, and figure out. And of course, once you've signed the term sheet, you'll be working with an attorney. But just for this part of discovery, you can just go ahead, and I'll leave some links where you can go read some term sheets and just start studying them and figuring out, what's liquidation preference, what are rights. How many board seats do I give away, or do I even have to give board seats away? Just all the things that I think you're not going to know, but I'm not going to tell you how to populate the AngelList, because I find that annoying. Because what I end up doing if I'm taking a course like that, I'm like, oh, great. So I just go to email, and I'm like responding to email and waiting for that, session to pass. And then I want to hear, tell me about email marketing. Tell me about, techniques that work. Don't tell me how to create my MailChimp account. So